Welcome back to Investing Talk podcast, where we sift through the information overload to bring you the most important insights quickly and clearly. Today, we're taking a look at a familiar name in consumer electronics retail, Best Buy. Their upcoming earnings report is certainly on a lot of people's minds. We're getting you ready for Best Buy's latest financial update. It's scheduled for Thursday, August 28, 2025, before the market open, and the conference call is set for 8:00 a.m. Eastern Time. We've really dug into the pre-earnings analysis, looked hard at the historical performance data, and gathered the recent market context, all to give you a truly informed perspective. Our mission today: uncover the key nuggets you need to understand what's really going on with this retail giant and, what you should actually be watching for. Before we unpack all this crucial information, if you find value in these breakdowns, please remember to hit that subscribe button, give us a like, leave a comment, or maybe even consider buying us a coffee. We appreciate the support. And hey, if there's a specific company or topic you'd like us to look into next time, just let us know in the comments below. All right, let's get into it. So as we look towards Thursday, what exactly are the market's eyes focused on for Best Buy's report? What's the street expecting?
Well, the main thing everyone's watching is the analyst consensus figures. For this report, revenue is expected around $9.23 billion, and EPS, earnings per share, that's projected at $1.22. What's kind of interesting here is that while there isn't like a formal whisper number out there—
Right, that unofficial number.
Exactly. The market commentary, the general chatter, it suggests expectations might be nudging just a little bit above those consensus figures, maybe some quiet optimism about inventory or certain product categories doing slightly better than people think.
Okay, so maybe a hint of positive surprise baked in.
Possibly a small one, yeah. And if we connect this to the bigger picture, you have to remember Best Buy's previous guidance. They really highlighted that consumers are still pretty cautious with their spending. They were quite open about projecting modest year-over-year declines in comparable sales.
That's the key metric, comps.
Absolutely, and overall revenue, too.
Yeah.
So because of that, they've been leaning really heavily on cost controls, trying to manage expenses to protect the bottom line, which brings up the big question: can those cost controls really keep offsetting the pressure on sales?
That's the balancing act, isn't it?
It really is. Our analysis suggests, these efforts have worked okay in the short term, but they might be hitting a point of diminishing returns. There's a risk there. If revenue keeps sliding, even tight cost control might not be enough without a bigger strategic shift.
That's a vital point. So given those cautious expectations and the focus on costs, how has Best Buy actually performed historically against earnings estimates? Is there a pattern?
Yeah, this is where it gets pretty interesting. Looking back at the last 4 quarters, Best Buy has, generally speaking, managed to deliver modest EPS beats, usually in the range of, say, +2% to +6% each quarter. For example, Q1 2026, they reported $1.15 versus the estimate of $1.09. So a $7.06 beat.
Okay, so they find a way on the bottom line.
They do. But the story for revenue is a bit different. Revenues have often come in either just in line with expectations or actually slightly missed them.
Okay. So managing earnings, but struggling with sales growth.
That's the pattern. And what's also striking is the market reaction after the earnings. The stock price moves have been, well, quite muted, almost subdued, even with those EPS beats. After that Q1 report we mentioned, there was a small intraday gain, maybe 1% to 2%, but it faded pretty quickly.
Really?
Yeah, and prior quarters saw the stock basically flat or even down a little bit, usually less than 2%. The actual stock volatility post-earnings has been way lower than what the options market was pricing in beforehand.
So the market isn't really buying the EPS beats, maybe looking deeper.
It suggests skepticism, definitely. Maybe about how sustainable the cost savings are, or maybe just bigger worries about the revenue trend and, importantly, future guidance. Investors might be looking past the quarter.
Right. So even with those beats, if revenue's soft and the market's reaction is kind of meh, what does that tell us about the underlying health? What about other metrics, like margins?
Good question. Those underlying numbers are crucial. Gross margin, for instance, it's been fairly stable, but definitely under some mild pressure. That often points towards, more promotional activity needed to move products, or maybe a shift towards lower margin stuff.
Which isn't ideal in a competitive market.
Exactly. Now, operating income, that does show their disciplined expense management. They have done a decent job controlling costs, even with revenue slipping slightly. But, as we said, the most critical metric, especially for a retailer like Best Buy, is comparable sales. Comps.
Yeah, that tells you if the core business is growing.
Precisely. It shows if existing stores and online are actually bringing in more business. And unfortunately, comps have struggled. They've been ranging from flat 0% down to -2% year over year in recent quarters. That persistent softness is the real overhang.
Okay, let's shift to the present then. What's been happening more recently? In the broader market or within Best Buy itself this past quarter that might shape these results? Any big product cycles or headwinds?
Well, specifically within Best Buy, there weren't any major game-changing product launches this quarter that you'd expect to really juice sales significantly. Instead, they've kept their focus pretty steady on expanding services. Think Geek Squad, their membership programs like Total Tech, that's their strategic direction.
Makes sense. Services are usually higher margin.
Generally, yes. They've also continued pushing on cost management, looking at corporate overhead, supply chain efficiency. We saw some minor tweaks in the executive team, but nothing like a huge leadership shakeup signaling a big strategy change. It felt more like steady execution.
Okay, and the wider environment. What was the climate like for consumer electronics retail?
Pretty soft, honestly. The whole sector felt it. Discretionary spending is still muted. People are cautious, especially about big-ticket items, fancy TVs, appliances.
And rising interest rates probably don't help finance those big buys.
Definitely plays a role. Plus, just general macro uncertainty hanging over everything. Now, supply chains are much better than they were. That's eased up. But we're still seeing some deflationary pricing in certain categories.
Prices coming down.
Yeah, in some areas, which obviously puts pressure on revenue and margins for retailers like Best Buy.
So, given that tougher backdrop, what are the analysts saying specifically about Best Buy right now? Are they leaning one way or the other?
The overall analyst view seems, well, measured. Cautious, maybe. Several are holding neutral ratings, maybe slightly bearish. We haven't seen a lot of dramatic upgrades or downgrades recently. Price targets have mostly moved sideways. The consensus is hovering around $75, but the range is fairly wide, maybe $66 up to $80.
And what are their main worries?
The concerns are pretty consistent, actually. It's the macro softness we talked about, the intense competition from online players and other big boxes, and that ongoing challenge of protecting margins when promotions might be necessary. Analysts seem to be in a wait-and-see mode.
Waiting for a clearer signal, maybe on consumer spending.
Exactly. Or some big strategic move from Best Buy itself. Without that, they seem hesitant to make a strong call.
Okay, so if analysts are kind of on the fence and the market's been soft, how is the stock itself behaving leading up to the earnings? And what about the options market? Does that give us any clues?
Well, the stock's been remarkably quiet, actually, trading sideways for the last couple of weeks, consolidating right around $71.50. No big run-up suggesting optimism, but no major sell-off suggesting fear either.
So just sitting there.
Pretty much. Which really makes you wonder, right? Is the market truly undecided, or is it just low conviction? Investors maybe aren't willing to place big bets beforehand.
Interesting. And the options market, what's that telling us?
Yeah, the options market is always fascinating around earnings. Looking at the near-term options, the open interest shows a bit of a skew towards puts. Suggests maybe some hedging, some cautious positioning. The call-to-put ratio by volume is around 0.85.
Okay, slightly more puts than calls.
Right. But here's the really interesting part. The options market is pricing in a potential move of plus or minus 6.2% for this earnings event.
Whoa, hold on. 6.2%, but you said earlier that actual moves have usually been tiny, like 1 or 2%.
Exactly. That's the disconnect.
So what does that huge gap mean? Is the options market expecting something big this time? Or just overpaying for insurance?
It's a great point, and it's a pattern we've seen before with Best Buy. Historically, that implied volatility, what the options market thinks will happen, has significantly overstated the actual move. So it suggests, again, maybe low conviction from the market overall. People are paying a premium for protection against volatility that, for this stock, often just doesn't show up post-earnings.
So it's not necessarily that they expect a huge swing, but they're nervous about the possibility in this environment.
That's likely a big part of it, yeah. It reflects maybe broader market jitters. The options market is pricing in a greater potential for a surprise, even if Best Buy's own track record is calmer. It highlights that general retail sector anxiety.
Okay, got it. So pulling all this together, the expectations, the history, the current climate, the options signals, what are the potential scenarios we could see play out after the report? What should listeners brace for?
Right, let's think about the paths. A bullish outcome for the stock to move up nicely would probably need more than just meeting the numbers. It would likely require both EPS and revenue to come in above that consensus. But just as important would be positive commentary. Stuff about, say, stronger back-to-school demand setting up a good second half, or maybe hints of tailwinds for the holiday season, Q4, and the big one, an upward revision to their full-year guidance. That would be powerful.
And better margins than expected, or growth in services?
Absolutely. Better margin resilience, showing those cost controls are really working, and definitely clear acceleration in services or memberships. That reinforces the long-term story.
Okay, and the flip side, what does the bearish case look like?
The bearish scenario probably starts with disappointing comparable sales. That's the headline killer. If comps are weak again or worsen, that's bad news. Compounded maybe by margin compression. Perhaps they had to discount heavily to clear out inventory. And then crucially, cautious guidance for the rest of the year. Any hint of lowering expectations or weak holiday visibility
Could trigger a sell-off.
could trigger a sharp one,
No, that'd be.
especially if other retailers are also sounding cautious. The market is not forgiving misses right now, particularly on guidance. It signals potentially deeper problems.
Okay, so lots of moving parts. But if you had to pick the single most important thing for listeners to watch when that report comes out, the one number.
If I have to boil it down, it really comes back to comparable store sales growth, comps. Any improvement there or any further deterioration, that's likely going to be the primary driver for the stock's direction right after earnings. It's the pulse of the core business.
Makes sense. So wrapping it all up then, taking everything we've discussed, what's our overall leaning for Best Buy's upcoming earnings? Neutral, bullish, bearish, and any strategic thoughts for investors?
Yeah, our overall leaning is pretty neutral, honestly. If you force me to put a number on it, maybe a confidence score of 5 out of 10, right down the middle. The rationale is basically what we've been talking about. You've got this track record of mild EPS beats, which is good.
But
The revenue trends and the general macro softness just point to continued caution. And then you have that options market pricing in a bigger move than usual for this stock, which probably signals low conviction rather than a strong directional bet by the market.
okay, neutral stance. So what does that mean for different types of investors? How should they approach this?
Yeah, that's the important question, right? How do you play it? For investors who are more risk-averse, maybe sitting on the sidelines through the earnings release makes sense. There's just significant headline risk. And at implied volatility premium means options are expensive if you're looking to hedge.
So maybe wait for the dust to settle.
Could be wise. Or if you already hold the stock, maybe look at protective puts to limit downside. Now, for investors with a higher risk tolerance, something like a short straddle or a strangle could be interesting.
Because the actual move might be smaller than implied.
Exactly. Those strategies profit if the stock doesn't move as much as the options market expects, which fits Best Buy's historical pattern. Alternatively, if you're nimble, you could watch for a significant surprise in comps up or down and try to play the post-earnings momentum. But just owning the stock outright, holding it through the announcement, that feels pretty speculative right now given the sector weakness and lack of obvious positive catalysts.
Understood. Well, there you have it, a comprehensive picture of Best Buy's upcoming earnings, distilled into the essential insights you need. We've unpacked the history, the current sentiment, the options market signals, and those potential scenarios to watch for.
You know, this whole conversation really highlights an important point, doesn't it? How much of market pricing, especially in options, reflects past patterns versus just future uncertainty and general market nerves? Remembering that implied volatility often overstates the actual move, particularly for certain stocks, that can be a really powerful insight for making your own decisions.
Absolutely. It really underscores the need to look beyond just the headlines and consider the deeper market mechanics. We certainly hope you feel much more informed and ready to make sense of the news when Best Buy's report drops on Thursday. Thanks so much for joining us for this analysis. Until next time, keep digging for those insights.